So this is an amazing opportunity for everyone to hear what we have to say about blockchain's applications in financial services. It's not that often that you get such an esteemed panel of participants from a number of different players in the industry. So our goal for this panel is to really talk upfront and real about how blockchain and distributed ledger is being used for different applications in financial services. And to help everyone in the audience get a clear sense and kind of organize the structure of what we're talking about, we're going to split up the conversation into 3 different areas. So we'll talk about how, right now, today, how blockchain and distributed ledger is being used in payments and settlements through a number of different specific use cases, talk about what's working and what's not working. And then we'll transition to talk about tokenization, which is very interesting, right? Like bringing new liquidity to assets through tokenization. And then the third segment, we'll wrap up by talking about KYC and AML applications. So just a quick brief to myself, and then we'll go down the line and introduce each of the panelists and what they do and what their background is. So myself, my name is El-baz. I run strategy at HashKey for one of our institutional trading platforms. Prior to that, I had a career in technology in both Silicon Valley and China. And to my left here, I will let you introduce yourself and your background.
Yeah, so I'm Teck Yu. I head Financial Services Advisory in KPMG. So I'm also part of the Global FinTech Leadership Team. And I think with that role, we have been actually looking at how blockchain would impact financial services, not just in Singapore, but across the major markets. And we have done work, in the payment side where we have looked at, not just cryptocurrency, but digital wallets based on blockchain. We have looked at KYC, not as an individual bank play, but as a utility for countries. We have also been looking at areas such as, using it for insurance, smart contracts, and so on and so forth. So I think there's been about 12 models that we've put in place where the use cases are designed globally into almost one that if a client comes to us and says, we want to build something like this, whether it's a stable coin or whatever, we actually have a model that we can bring to the table.
Hi everyone, this is Aditya. I lead the innovation and the fintech wing of OCBC from the technology and the innovation process standpoint. How we look at technology and blockchain is to bring value to our customers, our clients. Because as how we see is that what's the use of technology if it can't bring any benefit to our customers? So that's the way how we look at blockchain at the present, how we can use it to enable our processes, our internal technology, and bring more advantage to the bank and to the clients. Thank you.
Good morning. My name is Neil Thomas. I am the head of APAC for SIX Group. Just a little introduction on the SIX Group. We are the financial infrastructure for Switzerland, so we maintain the Swiss Stock Exchange, settlement, clearing, and custody business for mostly the Swiss banks. We also have other areas of our business where we look at the payments industry, so we run the ATM network for large parts of Switzerland. We also have a big innovation and digital arm where we focus on the fintech community with an incubator called F10, which looks to promote the idea of taking concept through to product. And we've done some hackathons here in Singapore. We have a very big interest in the future of Singapore and the technology side, and how SIX as an organization can stay relevant here over the next 5, 10, maybe more years. And I'm here really today to talk about tokenization and how as a business we see huge disruption in our space and how we're looking to maintain our position in the market and become even a more dominant player over the future. Thanks.
Hi, my name is John Ho. I head up the financial markets globally for Standard Chartered Bank, and we have operations around the world in this space. And what you might ask, why am I here? I've actually personally been involved in a lot of the blockchain and DLT initiative, having spent time in Japan, Singapore, and around the globe. And I would think where the areas of focus for us is in the payment space, asset tokenizations, the back-end infrastructure to improve efficiencies. So I've also been involved in a number of industry working group. I lead the Futures Industry Working Group for FinTech and Crypto Study Group, which I chair globally. So we could see the sort of use cases, proof of concepts being brought to fore in the Americas, in Europe, and also in particular in Asia Pacific. Thank you.
Thanks. Before I start, I would just like to highlight something which I just noticed, While we walked in, we didn't decide, what order we would sit in, but when I just look back, I see that all our names and designations have been put in the right order, so well done, the Compass team. Excellent. Did you use blockchain? Okay. I'm representing DBS. You all know DBS, the best digital bank in the world and the best bank in the world, so I don't need to repeat that. Who am I? I'm Amit. I'm part of DBS, who looks at open account trade financing, and what we are trying to do is to see how we can move away from the traditional banking trust elements that we use in financing, and we'll speak about that in a few minutes.
Great. So just to kind of set the tone here a little bit. As I mentioned at the beginning, we're going to start off talking about payments and settlements, a number of different use cases. But what's really important about each of these segments is as we go through this, we really want to share what's working, give you a high-level description of what's being done, what's working, but also what's not working. And I just wanted to share two recent stories from the Wall Street Journal and from Gartner that kind of show different perspectives on applications, right? Like recently the Wall Street Journal came out and said that a number of blockchain projects are moving out of the experimental phase and into production, a sign that the technology is becoming more integrated in the global financial infrastructure, right? Seems positive. But on the other hand, you have Gartner coming out recently and saying, many CIOs are overestimating the capabilities and short-term benefits of blockchain as a technology to help them achieve their business goals. So there's a lot of different perspectives going on in the industry right now. So I think that this panel is really helpful to sharing specific cases of what's working and what's not working. So maybe let's dig in first to payments and settlements. Maybe chat, each of the panelists, you can chat a little bit about your perspective on a use case that is in this section. We'll start?
Yeah. Thanks, Ben. So I think I'll just pick up some of the use cases that we have already implemented in trade finance or payment or settlement industry. Let's just picture a scenario in China, okay, where I am an OEM and our panelists here are all part of an ecosystem, and I'll describe the ecosystem very shortly. So I'm an OEM, okay. Ben sitting out there is the distributor who is actually supposed to, let's say, purchase a car from me and then sell onward to the general public, okay? So we're looking at how do I get the information from Ben to me in terms of, yes, I need 10 cars, okay? And then how do I transfer the car from a province to ultimately the location of where Ben is actually residing? So from a China perspective, there are many provinces, and to move a car from the warehouse of the OEM to where Ben is located, we would appoint John, let's say, as the logistics provider. And John would then have Neil, Aditya, and TechU appoint as carriers who would move the car from one location or one province to the other. So it's a chain that is being created where Ben is raising a PO, the purchase order is received by the OEM, that is me. I appoint John as the logistics provider, and logistics provider then appoints the people. So this whole process of the car moving from point A to the destination involved many parties, as you can see, and everybody used to do their role and would share that information onwards to the next partner. However, the previous partners or the end person, that is Ben, would at any point of time would not know what's happening. So the information was only limited to the previous partner. It did not have the information of what work was completed by the previous partner and the visibility that Ben wanted. Where is my car? Is it in province A? Is it in province B? When will I reach it? Now that is from an information perspective. Secondly, from settlement and payments perspective, only once when the complete job was finished, that Ben would come back and say, hey Amit, I've received the car, you can release the payments to the intermediaries in between, okay? And I would trust Ben, therefore, that if Ben gives me the information, then only I would make a payment to Neil or Aditya or TechU in the interim. I would not trust anyone else. Now, just imagine Neil, Aditya, and TechU who have completed their set work, performance, they have to wait till Ben comes in and confirms. So from a finance perspective, that meant that any of the intermediaries would only get paid maybe after 90 days in this actual example of the performance being completed. Now that was a challenge that we needed to solve for, right? How do we trust each other, okay? And how do we ensure that the people who need the money at the right time is made available? That's what we did with the help of Wanxiang Group, as well as the Zond Logistics, the OEM that we're talking about. We were able to come out with a solution where all the intermediaries and the OEM and the distributor hopped onto a platform, what I call as an information highway, which is of course enabled by blockchain. It carries all the information, what is being done by the previous person and therefore what information is coming to me, accessible at any point of time. And for the first time, which I saw, that the bank moved away from going from a single trust element, that is, Ben submitting me an invoice copy or a waybill or a shipment copy, right? Banks traditionally have always asked for documents. And for the first time, we said, okay, we don't need any more documents. As long as I get the information and the data which is validated through that blockchain technology, that Thomas has completed his part and is moved from part B, goods from part B to part C, the bank is ready to make the payment or an early payment to Thomas. So that was where we brought a lot of value to the SMEs who were not getting paid on time, and we moved away from what we traditionally used to take, that is invoice and the shipping documents for financing. So that's a use case that we have already implemented in China, and we are trying to replicate that across our markets. Quickly, I would move to the second use case, which we are under implementation or under development, is multi-tier supplier financing. Now, just taking the same case, it's not that it's only a first tier for an OEM that he needs to have visibility on. He needs to ensure that if his production involves multiple tiers, where the steel is coming from, how the steel is being fabricated into body parts, how the body parts for an automobile manufacturer are being used and added to the switches, where are the rubber coming from with the tires, etc. So he needs to have a full visibility of the underlying chain, and also to ensure that the financing or payment is made to the tier N or tier X of the supply chain in the right time and quantum. That's again where we are trying to put an information highway where the tier 3 or the tier 4 or tier 5 suppliers are able to come onto the information highway, give all the information with regards to the purchase orders, with regards to the invoices, with regards to the shipments. Everybody will have the visibility of the quality of the goods, the quantity, etc. For banks like us, we would know, yes, job A has been completed, and therefore I can partially finance job A. I know there is an end order from the OEM, so yes, it's not being manufactured and to be sold. These are already pre-sold. So all that information helps us get more insights onto the value chain and therefore provide early payments or settlements. So that's the use case that we are working also in the bank.
Yeah. And then a lot of people in this space, a lot of people always want to know, like, how is blockchain useful, right? Like, when is it useful, when is it not useful? People just throw around the term as an easy buzzword. But it seems like from your example, the key usefulness of blockchain and distributed ledger is that it kind of creates a new level of visibility into data, like real-time access to data, yes, which then has some really important knock-on effects to when you can pay different people in a multi-tiered supply chain.
Yeah. 100%, as I said, we had never, ever looked at transactional documents beyond invoices and shipping documents to ensure and validate that this is genuine trade. And that was the trust factor that we used. Now we are using, the data which has been stamped through a blockchain hash mechanism to use that for financing.
Gotcha. Gotcha. Great. Thanks for sharing.
Hi. I think that there are two use cases that I wanted to share with you. One obviously is on payments. As Amit mentioned, that payments is lifeblood of banking. But what are we trying to solve? Because I think if you look at, in particular, the kind of payments you made on mobile phones, these are kind of instantaneous because either they are in the form of e-money or stored value facility that a lot of individuals or millennials could use instantaneously. But when you actually make payment cross-border using real-time gross settlement, it's a problem because on a weekend, the banking system shuts down. So a number of projects that we have been involved in on either a consortium or cross-border basis is trying to address how do we make cross-border payment more efficient, cost-effective, and having a single source of truth so that payment could be made in large value and also addressing KYC, AML situation. So obviously that's a journey itself, but I could say that, pleased to say that on a governmental basis, on a private basis, in some of the projects we're involved in, this is an area of focus on an intergovernment basis, on a private sector basis. And I think in a short period of time, within 1 or 2 years, we could see real use cases of RTGS payment, utilizing blockchain, leveraging technology to provide one single source of truth, faster, cheaper, and more efficient payment. The other thing that I'm focused on, which is kind of passionate, is the area of asset tokenization. As you could see now, tokenization is a buzzword, but what actually do you mean? Do you mean tokenization of financial assets or tokenization of real-life assets, like, for example, commodities, precious metals? There are a number of enterprise use cases led by the financial industry in particular, as well as large companies looking at how do we address some of the press point in the supply chain, in the financial infrastructure, in particular on clearing and settlement of securities. Now, you could say blockchain can do all this, but what people do not address is what happened post-trade. How do you reconcile your securities, payments, records, and ensuring that reporting requirements are all met? Now, as we speak, a number of trade bodies like IOSCO, FATF, Financial Stability Board are meeting in G20 finance meeting in Fukuoka on the 8th of 9th of June this week to come up with some sort of a global principles to address the ecosystem on crypto assets. When I mean crypto assets, this is not just about just cryptocurrencies, it's wider than that. It's digital assets underpinning financial assets that we know about it, securities. And if you look at the scope of securities, what we're trying to do is to unlock value and create fractional ownership on assets and also illiquid assets, turning that into more liquid assets and creating a new investor base. So there is a report done by Gartner and PwC that the potential for asset coordinations runs into trillions, given the number of financial assets that are there globally. Not the benefits of it is you allow for 24/7 trading. You don't need to wait for trading hours. And when you do it on a blockchain, it allows a party to transact and having a single source of record, real time, faster, better, and with a single source of truth.
So maybe just go, you mentioned it a little bit towards the end here, but I think for the audience, there may be some people who understand what tokenization means, but maybe at a high level, just to set everyone on the same playing field, talk a little bit about what does it mean to tokenize an asset, and why is that important, why is that valuable?
So think of it, tokenize of assets is in a most basic sense, is a digital representation of the assets that you hold. More often than not, traditionally people understand it in the form of securitization. But when you tokenize an assets, you actually digitalize a representation of ownership in a particular assets or interest in a financial instrument. So right now, if we speak, there are a number of initiatives led by governments and on a private basis as well, institutions looking at how do I tokenize assets, in particular hard assets like real estate, securities, bonds, and also illiquid assets like precious metals and commodities. So I think that essentially is important because it unlocks value, as I mentioned, and it creates a new asset base.
Yeah.
What do you think? Oh, go on.
I can just add to what Tom said, right? John said, in terms of tokenization. So in the same example, I just continue that example. So there was a receivable which was created by each of the intermediaries. And the OEM was supposed to pay for these individual receivables. Now, receivables was something that only banks could finance. And when banks used to sell those receivables to manage their balance sheet, they would only sell it to their banks. Now, just imagine if you can convert these receivables into digital tokens or tokenization, as we are saying, and everybody understands the underlying value of these receivables, those could be, as was said by John, those could be then split into smaller values. You can't split an invoice. You can't just tear the invoice and say, hey, you finance this part. Now, the tokenization helps to split that receivable, and it opens up a new class of markets, who can buy such underlying assets.
Yeah, gotcha. And I think, Neil, you guys have been doing a significant amount of work in this space, right? Trying to bring regulated markets to to the tokenization of different assets. Maybe talk a little bit about what you guys see, what you're doing, what's working, where do you see the challenges going forward?
Sure, thanks. So at SIX, obviously we're historically and for 100 years have been maintaining the Swiss Stock Exchange, and that's obviously been a central body and long established. But the market is moving very, very fast. Disruption is now at a pace where you can't ignore it. So whether we wanted to or not, we were kind of forced into looking at the future. We feel that through DLT that the technology is now there to support a move away from the traditional exchange model. So we are, through an initiative, well, it's more than an initiative, it's actually a live project called SDX, 6 Digital Exchange. We are creating the first fully regulated digital exchange using tokenized assets. So the principle behind this, we have an end-to-end solution. So we look at it from issuance right through to custody. What we've realized, if you want to raise an IPO in the Swiss Stock Exchange, the minimum you can do is 25 million Swiss francs. So that obviously is a barrier to entry for a lot of people trying to raise capital. And also at the other end, you've got crowdfunding, which obviously is accessible to everybody, but not necessarily in a regulated way, and can't also provide an exchange as you might wish. So we decided that based on these requirements, we'll create the SDX exchange as an end-to-end platform, and that allows us then to tokenize assets. So it could be a traditional financial instrument, or going forward can be, well, there's 70% of the assets in the world currently can't be traded. So to John's point there about looking at property, looking at even wine or artwork, if you can create a token around that, then you can trade it on the exchange. The exchange can then offer immediate settlement as well. So currently on our exchange it's T+2. It takes 2 days to do that. We're offering efficiencies to the market. You have to do this, we believe, truly in a regulated environment. So we work hand in hand with a Swiss regulator called FINMA, and also with a consortium of banks, because you've got to make sure if you're going to put this sort of investment into a DLT project, or well, it's not actually it's a project that happens to use a DLT, you've got to make sure that there's a market for this, and we're convinced by that. But what we've got to make sure is that when we ramp up, that we have the people on board, so you co-create these things, right? You don't go it alone and hope for the best. It's not a field of dreams, build it and they will come. It's very much, let's make sure that the market is there, and as we do it, what asset classes do you want? We start with the easy stuff, and then as we work up, we look at the less traditional stuff over time and create this market. And that's really what we're doing to try and support what the market is looking for going forward.
Yeah, sure. And I think this is open to both yourself and John. You guys have touched on it in a few different areas, but with all the potential in using the technology to create new liquidity pools for assets that were, traditionally or historically illiquid, what do you think? It's a lot of promise. There's a lot of potential there. What do you think are some of the challenges? Like, what do you think is preventing that? Like, what do you think is the timeline on that? Like, maybe go into what you think would be some of the barriers to adoption.
I think the barriers are, I think for us, there's not an option not to do this. And if we don't do it, standing still is not really an option. If we don't do it, then someone will come along and do it for us. So we have to move. The big barriers are clearly making sure there's uptake. There's a lot of investment already happened. A lot of directors on our board are very nervous, but they understand that the underlying need is there. If we make sure that we have people on board, particularly the regulatory piece, I mean, this is the biggest challenge that we find is making sure that the regulator is on board, especially around the trading part of this and obviously creating the CSD. We need to ensure that regulatory, and that's taken 2 years to get to where we are now. So we're hoping to get the final rubber stamp in the next couple of months, and then we go live. But that's a big challenge, the regulation part. The next big challenge I see is globalization. So at the moment we start in Swiss currency in Switzerland. How do we get this global? Because obviously to have a proper interchange and distribute it by its very nature, you need to take it outside your own borders. There's a big discussion about, okay, to your point with the G20, how do we get everybody to talk? So how do MAS, FINMA, HKMA all come to a similar conclusion that allows these things to be properly distributed? And I think these are the challenges that we face to try and get that to the next stage.
Gotcha. And John, to you, what do you think are what are some of the specific regulatory issues that need to be solved at a local level, national level, and/or a global level?
Yeah, I think one of the most important things that we need to solve is the different treatments in terms of what the digital assets or cryptocurrencies are. If you look at different jurisdictions, there are different ways they have categorized it. In the US, under CFTC, it's considered a commodities. In Europe, they are trying to sort of classify it into different categories like payment tokens, utility tokens, and security tokens, and there are even hybrid like asset-backed tokens. So I think what is important is to have a harmonization of taxonomy. How do you treat the classification of assets? The other thing is, resulting from the classification, how do you regulate those assets? In particular, where crypto assets are defined more as a security, what we end up not realizing, a lot of the crypto exchanges or providers, is that given the global nature of your crypto assets, your investor base is not just local. You can't really regulate that. If you allow access to client, it could be global, especially where you have secondary transfer. And you need to think about the cross-border impact on the regulations. So in terms of the barriers on mass adoption, especially in the context of banking and finance, we need clear rules, especially in particular from national regulators and international regulators on the classification, on the regulation, and also cross-border sort of convergence in terms of how they treat and how they regulate that. The second point is on interoperability. We hear that a lot. I mean, in our space, we have looked at all the different public and private blockchain network out there. We have compared them. We look at it. I'm not going to go into pros and cons publicly, but what we could say that while there are benefits out there, the problem lies is some of them do not interoperate very easily when we look at, in the context of what we look at the use cases on tokenization. So that's an area that needs to be addressed. The other thing is about scalability. We talk about blockchain is trying to solve the world, but if you compare against Visa payment, Visa can actually handle thousands of transactions within a milliseconds, as opposed to certain types of network out there that currently have scalable issues, because that's by design, the building blocks of blockchain is probabilistic, where you have 10 blocks to sort of confirm a transaction in context of Bitcoin. So that obviously hobbles the speed, but obviously that's by design. So you need to look at the pros and cons. And last but not least is important in the context of securities is settlement finality. When you put things on blockchain, are you assured that the transactions is settled in accordance with legally enforceable binding rules? That's something that is important, and I think it's important for the participant ecosystem to build proper governance, resilience in the systems, and ensure that you can foster trust within the ecosystem.
Gotcha. And do you think there was and just every now and through this panel, we'll go into some questions that have come up from the audience. There was a question that was about basically about the future of blockchain for financial services. A lot of people are wondering whether or not tokenization is the most exciting trend, whether or not that's the end all be all of blockchain's use case in financial services. Do you agree with that vision? Do you think that being able to tokenize and open up new liquidity for assets, tokenization is basically the most important use case, or do you think it's just one of many?
Yeah, I think it's one of many as we speak, because I think why it's interesting is because for the first time it allows, as I mentioned, fractional ownership, real-time trading 24/7, and the sort of potential use cases is immense. If you combine not just with the blockchain, with the other sort of use cases like IoT, AI, and I think the potential of actually monetizing data and allowing for clients to trade some of these assets on a digital real-time basis is a very compelling case. I think we are actually in the early innings. You could say that, you say all this on stage, but where's the real life cases? Using the cricket parlance, we're actually in the early innings. Obviously, the rules have to come up to speed, the infrastructure have to come up to speed, and the ecosystem needs to be mature in terms of cyber resilience, systems, governance, and a whole host of things needs to come into play. But I would say that this thing that we discussed is not just happening in Asia Pacific. I spend my time traveling around the world and involved in a lot of government sort of liaison work. This initiative is a key focus, not just in Asia, but it's in Europe and Americas as well.
Gotcha. And as you guys have noticed through a number of different conversations here, the word data has come up, right? An incredibly important part of this section, but an incredibly important part of the industry. And John just mentioned monetization of data is an interesting part of tokenization. From the payments and settlements use cases, supply chain finance, trade finance, looking at invoices as an asset and then tracking that asset. It's all points of data. And as you think about this, another really important asset, or really another important piece of data, another important category of data is user data, is your own personal identity, is someone's background, who they are, whether or not they're on a white list or on a blacklist. So that brings us in some ways to the third section of this panel, which is talking about how blockchain and DLT is being used for KYC and for AML, a number of these different applications. A lot of this is based on user identity data. So maybe one of you can take a swing at what you're seeing in the applications of KYC, why that's interesting for financial institutions, and what the bigger story is there.
Sure. So the current use case, what we are working on is, which revolves around the KYC and the AML prospect. So why that particular use case? So from the bank's perspective, or from the client's perspective, or customer perspective, KYC is always a pain in terms like from customer angle, we need to submit a lot of documentation as an individual. As we move, if we go to SME or large caps or any business entities, we have to submit a huge volume of paperwork to the bank. And from the bank side, a bank has to process all these documents. So this is time consuming, costly affair, which means if I go to a bank today and I want to get, as a SME, I want to get financed for some of my projects, it will easily take me a week or two if everything is okay to get the financing done. So that's where what we are working on is creating an eco space where we can collaborate with multiple entities in terms of from the government, from the partner banks, and to see how we can leverage on the data, the identity management and the other information available with everyone to speed up the KYC process altogether. So if you see now, the governments, especially in Singapore, has created a central repository of all this information, right? Like MyInfo, MyBizInfo, and others, which banks are already leveraging upon to speed up their process. But when it comes to businesses like SMEs or large caps, we are still dependent on a lot of documentation to be submitted. So that's where we see. And now going broader, right? Let's go cross-border, right, for KYC. What if an entity from Indonesia comes to Singapore and wants to open an account here? Today, the process is quite lengthy. First, from the customer side, where they have to go to their respective banks or regulators in Indonesia or any other countries to get all the details, what is required. Come to Singapore, get it attested from a lawyer, and then only it can be submitted to the bank. And from the bank perspective, it's very difficult for a bank to validate all this information, right? Because there is, what's the source of information is, can we really trust that source of information? And there is a lot of back and forth which happens. Again, a very time consuming. So that's where we picked up a use case, and we are working with multiple parties to create a complete ecosystem in which first we want to see how we can bring all the respective source of information together and use it to speed up our KYC, and second, to go cross borders. How we can collaborate with banks and the regulators outside the territory of Singapore and use their source of information to either to validate or to bring all those customers to Singapore with a quite easy manner, right? The biggest roadblock or hurdle what we see is that every jurisdiction has their own way of solving this KYC. KYC and AML, the rules are written in black and white, right? So, and being in Southeast Asia, what we see is that every territory has some unique flavors to this KYC, which is one of the difficulty to bring everyone on board, or how do we comply to each other? How do we use the technology to bring everyone on the same platform? So that's where we are working on right now. The second aspect is with respect to data security, right? Because this involves a lot of customer information. How do we keep that customer information secure with the use of technology? And the third aspect of it is, like, as we see that as and how everything is moving towards the digital space. What is a service availability? We want to have a system which is robust, which is available, and with redundancy. So that's where we see the use of blockchain is, and how we can leverage on the DLT technology to bring all these aspects together.
And maybe at a higher level, just to help people visualize the solution. In the use case that you're talking about, was it for individuals, or is it for companies? What does the process and kind of the technology architecture at a high level look like, right? Do you go in, you sign up for like a user profile, and then you can grant access to different entities when they want to, verify that you are who you are? Or like how does the flow work?
Okay, so it is not only for individuals. So once it is live, it will the technology or the platform can be leveraged by everyone, individuals, business owners, SMEs, or large caps, small caps, all type of it. So how as a journey will look like for a customer, right? Currently, what happens is if I, as a SME, I'll always take SME as an example over here. So as a SME, if I go to a bank, I'm provided with a list of documents to be submitted today, right? I go out, if I'm a Singapore registered organization, I go to multiple websites, either by the government or on the bank's website, to collect all these documents. I go back to the bank and submit it. Some of the banks are digitalizing this process, like you submit online, but still a submission has to be done. And behind the scene, a person receives all these documents and cross-validates it, right? Are these documents authentic or not? Because it's just a piece of paper. Anyone can reproduce this without any challenge. So the second part is validation. So that's exactly what, as a high-level architecture which we are building, is that first is to reduce the paperwork to be submitted by an individual or an organization, because what we need is, as an individual, we need the NRIC or any supporting ID number, and then for the businesses, we need the entity registration number or the GST number, right? And all the other detail is already available on the government websites, which we can leverage on. The second is with respect to, as I mentioned, that we are looking at it as a complete ecosystem. So how an ecosystem? Because SMEs or any individuals don't only work with one bank. They work with multiple or financial institutions, right? So why can't we leverage the KYC or the AML, which has already been done by a bank in that ecosystem, then to redo all the activity again? So that's where we can share the knowledge what a bank or a institution already has with the partner bank or anyone in that ecosystem.
And I think just like sharing some research and news from everyone in this audience, I think this was recent. recent reports from BIS research that mentioned that by using DLT-based solutions, you could reduce the administrative costs associated with AML and KYC for financial institutions up to 90%. Savings between like $6 billion to $8 billion, right? So very bold claims. But in order to actually reach that vision, right, you have to rely on a lot of different inputs, right? You have to have the data. You have to have multiple participants sharing that data. There has to be standards across all of that. From what you've seen, how are you incentivizing? How are you getting different participants and banks to believe in this and trust and share data into the system?
Okay, so this is not only a problem area which only a certain bank has. It's a common problem across the industry altogether. And looking at the advent of open banking and other, where sharing of information is one of the key, right? How we grow together as a financial institution. So that's where how we see that to solve our as well as the others problem area, because KYC will happen, AML will happen for sure, but it's looking at as a prospect of how we can partner together and grow together in the ecosystem.
And Tech, your perspectives on that space as well, in terms of the, what you've been working on, what you've seen, what's working, what the challenges are.
So I think in specific area of KYC, as you build on a sort of shared model across the industry, the biggest issue is trust, right? And I think the other big issue is liability. So if Bank A screws up and Bank B relies on Bank A, Bank B gets into trouble. Right, so I think those are the key areas that we have to work through, and that's why the regulators' input is very important, right? So we are actually looking at some of these things across multiple countries, and the first thing you want to do is make sure that you actually have a standard, operating standard that is, regulator approved, right? So all the banks that comply with that, and it's not a Singapore issue, but if you go to Indonesia and you go to some of the other countries, there are many tiers of banks, right? So the tier 1 banks tend to comply to global standards, tend to, because they are correspondent banks with the large global banks, they have a minimum standard to comply with. But then you go to the tier 2, tier 3 banks, you will run into an issue. So we have developed a model, right, where it says that only tier 1 banks can participate as contributors of data, right? But tier 2, tier 3, tier 4 are consumers of data. So they can use it, but they cannot actually contribute into it. So the essence of this is that it's actually not a technology problem. It's a business model problem, right? I think as we look through all the use cases, right, when we look at the trade finance piece and all, it's also looking at, when you start going cross-border, do you have electronic bills of lading? Do you have e-invoices that actually operate across multiple jurisdictions? So what's the standard for that? What's the messaging standard underlying? What's the format standard? So all the work that we have been doing in KPMG with a lot of these use cases is really to say that technology, other than 3 issues, I guess, one, interoperability between technology, one is scalability, and one is speed. You keep that aside, the bigger problems to solve is really about what changes from a business model perspective. If you look at the whole securities, the work that you are doing, right, the role of an exchange changes altogether. When all this comes in, right? Because the role of the exchange, right, is to take care of a lot of counterparty risk, settlement risk, and custody. But if you have a decentralized model, a trust model where everybody can trust the data, it's transparent, it's online, right, and transparent to everybody, the role of the exchange as a counterparty risk mediator disappears, right? And that changes even the compensation model. How do you get paid for being an exchange, right? Other than big IPO fees, right? So transaction fees disappear, right? So there are issues around that. When we look at the cross-border payments, so we're working with MAS and the Bank of Canada and Bank of England to actually look at the concept of digital currencies that's actually backed by sovereign state, right? So it's sovereign-backed digital currencies. And the 2 use cases that resonate here is one around high-value trade finance settlement and cross-border security settlement, right? And the reason why we chose these use cases were One, that there's obviously a lot of pain whenever there's cross-border, but actually the volume is actually high in value but not in number of transactions. So on the point about Visa and all those, when it's small value but very, very, very high volume transactions, the technology is not scalable for that. Right? So we were looking for something that we know that technology will work, right? But what came across as we spoke with the 3 regulators was policy issues, right? Today you control money supply in a real way. Right? You print X trillion dollars, you got X trillion dollars in the system, right? Suddenly you start, adding digital currencies, coins on top of it. You literally lose control of whatever national, currency policy that you might have, right? So these are the things that we need to work through. That is actually, somewhat beyond the technology side, but really on the policy side. So this is going to be interesting where I think when it becomes mainstream, it will come in specific use cases. Where would it be best used, right? Versus trying to boil the ocean and say everything in the world can be digitized. So we look at a couple of things. We say anything where there's a lot of data that needs to be transferred, where you require transparency. Anything that requires trust, right? Anything that actually can be improved from a process perspective through smart contracts, right? All this becomes clear criteria for selecting the use cases. And interestingly, I think that we didn't talk a lot about it here, but we are seeing more and more of it being used in insurance, right? So insurance smart contracts could be on the claim side, right? We've put in a travel insurance product from underwriting to claims, totally end-to-end on blockchain, right? Which means, you think of a high ops to a low ops model, we went to a zero ops model, right? Which means if your criteria for a claim meets the criteria in the blockchain, the payment will be made to you without you even having to actually make a claim, right? And the way you do that is by tapping third-party data. Right, so get third-party airline data, third-party airport data to look at baggage delays, to look at flight delays, right, or lost baggages. So these are all models that are being put in that I think would be interesting for the future, right? When you look at your organization, it says, what are those things that, had we put in, had we been able to trust, had we had the transparency of information, we would have done this differently, right? And those are the ones that you will say, are the ones that you can add the most improvement.
So you did mention DLT and insurance, which I do believe is another topic of this conference. So it will be addressed. But I wanted to get into another question. Right, we've talked in a number of different areas around standards, around policy, around regulation, and I think what the entire industry is bumping up against is whenever you have a new technology, it tends to make you able to do things in a different way, lower cost, more efficient, which kind of in the past wasn't under existing regulatory or policy frameworks. So a question on that side, on the KYC side, do you think that when you look at the existing KYC framework and what you have to do to verify identities, with the implementation or application of this new technology, do you see anywhere where existing policies or standards need to be changed? And I would say after this, I think this question could also be posed to other participants, right? In the own use cases that you see. Do you think there are really specific policies that do need to be changed?
So I think from the liability concern, right? I think regulators need to be, more cognizant of the fact that if you want to push this as a way to save, actually improve customer service, but also save costs in the industry, they must be able to find a way where the liability cap is actually managed, right? That means, at what point. And that's where the business model comes in. The other one is collaboration of regulators across border, right? So you have a case where, you might want to trust your subsidiary in Indonesia, but because MES doesn't audit that subsidiary, right? There's a concern about whether they would accept whatever reliance you put on it. So all those things need to be really looked at. But I think the other bigger problem is, even within the regulatory framework, regulators are very different country by country. And interestingly, the more developed the country, the less influential the regulator is in prescribing these sort of changes, right? They leave it to the market to do it. So what we are seeing across the world now is we are doing a lot of KYC, sort of utility type work in emerging markets, right? So we're doing it in UAE, we're doing it in Bahrain, right? And the whole idea in those smaller markets, the regulators are pretty persuasive, right? Like in Singapore. But as you go further and further into the developed markets, we are finding a lot of pushback from regulators and saying that, oh, this is not our role, right? You know, the industry has to get together and work, and then come back to us to lobby for policy changes, right? So it's pretty different elsewhere.
And then, you want to add a point to that?
Yes, certainly in certain areas there will have to be some involvement from the regulators, as what mentioned, like regulations from different geographical locations are different and sometimes unique as well, depending on the country. But with respect to a certain, like if you see on a vertical level, like on a Singapore level or on an Indonesian level or any other country for that matter, on a vertical level, I don't see that the regulations have to be changed drastically, because regulations are based on what the information is already available in some source or means. The only thing which I see have to be changed is the way we collect that information. And the information what we have collected and validated, is it acceptable as per the regulators or regulatory guidelines or not? So that's what I see.
Gotcha. And then just as we only have maybe around 4 minutes left, we'll end with a more interesting question here, which is in each of the application areas that you guys have specialized, or you spent most of your time in, you know, payments and settlements, tokenization, and KYC applications. What's most exciting to you over the next 2 to 3 years? Like, what of everything that's developing in this space and the use cases that you've seen, like what do you think has the most potential? Let's start.
Yeah, I think for me it's about opening up new asset types. You know, this is a complete shift in the industry. You're moving away from what is traditional financial assets and opening up all of these assets to trade. So, you know, it's a real game changer for the art industry. If you look at the national galleries, I mean, 4/5 of their artwork sits in a vault beneath ground. You know, if you can tokenize that, you can get investment in that. It's very exciting. These people hold all these assets that suddenly can create this liquidity and capital in the market that just doesn't exist right now. I mean, this is game changing, really. For us, it's very exciting to be at the front end of this. I think it's really exciting. I mean, we're being chased heavily. You know, clearly, everybody is wise to this. But keeping moving forward and being at the forefront of driving what the policy should be, working with the regulators to set the scene, it's a privileged position to be in. It's very exciting. You know, I think it's going to change the industry. It's going to change banking and security services. Everything will change fundamentally in the next 3, 5, 10 years. Will financial services look like they are today in 10 years' time? We can all probably agree no. What they will look like, we don't know, but it's interesting and very exciting to be able to shape what they will look like going forward.
Yeah, I think one of the takeaways that's important for the audience is the emergence of new business model. So the World Economic Forum recently did a study on DLT and said that the potential for DLT in the context of banking and finance is the emergence of at least 10 to 15 use cases that currently doesn't exist. You will have DLT on custody of crypto assets, crypto exchanges, you know, mutual funds, management of crypto assets. And as we speak, in the US, there's application made for ETF on a portfolio of crypto assets and digital assets. And we look at the digital assets, it's not about the front end. There's a lot of back-end infrastructure that could leverage DLT for efficiency play, reduction of costs, automation, and also reducing duplication of systems. I think that's an important thing to bear in mind. We are in a new frontier.
Amit, your side.
Yeah, I think already captured by Neil, you know, in terms of how would banks look like. Obviously, it's completely going to change, you know. And internally, you know, from a bank's perspective, we had certain products which were existing in the market for like last, say, 30, 40 years, you know, the LCs, the guarantees, you know, the cash payment solutions. It'll all merge. It'll all merge. In future, what we'll see is, you know, how financing and payments are a single solution for the customer. You know, how are payments, again, you know, being mixed. So banking will become easier. Okay, it won't be as tough as it is right now, and it will completely change the internal suite of products that banks used to sell to the customer.
Aditya, your side.
Okay, so I have one question though. I was waiting to ask that question. Like, we are talking about regulation in digital asset area, right? What exactly are digital assets? Are the protocol and the cyberspace? Protocols to create the digital asset and cyberspace to hold that digital assets? How do we see regulators entering in that area? How a protocol which is just a maths or an algorithm, or a cyberspace which is means completely independent, how will a regulator regulate these two areas?
So I think if you were to play the hat of a regulator, right, and that's what you're asking me, how do you trust algorithms to be genuine assets, right? So it again comes back to trust, right? Now, and I'll go back to the example which I saw in the morning. Can you make a chicken nugget back to a chicken? Now, if that is what the technology is, the algorithm is, then yes, you got to trust it.
We'll leave the last, the last point, the last nugget to leave the audience with here.
Yeah, I think when we look at what changes, right, I think I agree with a lot of points here, but I think what makes a difference is both on what I call market access, right? So today, a lot of SMEs, a lot of individuals don't get access to banking services because the cost to serve is too high. But if you can manage to bring the cost to serve down through DLT, whether it's from the KIC, AML perspective, or even from a payments efficiency perspective, you open up a new market altogether, right? So the unbanked, underbanked, right, will suddenly become customers. On the flip side, with tokenization, if you look at big financing areas, asset financing areas like aviation and maritime, and even large, sort of multiplex construction, today they are in the hands of very few large banks, right? But with tokenization, you can actually open up the financing opportunities, right, to the smaller banks and even to non-banks, right? So suddenly you see that the competitive landscape at the top will change, competitive landscape at the bottom will also change, right? I think that's exciting from a market perspective as to how lives get transformed through a technology like this.
So key new market opportunities, new forms of liquidity. Well, we won't hold all of you back from lunch for too much longer here. Just want to thank you for being a part of this amazing panel from an audience perspective, and I hope the viewpoints and ideas and use cases shared about what's working in payments, settlements, tokenization, and KYC was interesting and also relevant to everything that you're doing on a day-to-day basis, but also relevant to something that you might be doing in the future. So again, thanks for your time. Feel free to seek out any of us after this panel. Thanks.